Hello, everyone. Welcome to Tax File. Today, we are breaking down a massive development in the Indian securities market. SEBI has just released an interim order against Rajesh Exports Limited, a giant in the gold refining and manufacturing industry. The numbers here are staggering. SEBI has found a Prima Facie revenue misstatement of over 15.15 million crores. In this video deep dive, we'll look at how a multi-layered corporate structure was used to shield these numbers, the circular trades with a stockbroker that never actually happened, and how company funds were routed through the personal bank accounts of the promoters.
Our analysis includes 6 key areas, covering the corporate structure, subsidiaries, step subsidiaries, etc., revenue misstatements, non-genuine sales, opaque trade netting off, promoter fund routing, and the resulting market cap erosion. The corporate structure is complex, starting with Rajesh Exports Limited in India, leading to subsidiaries in Singapore and Switzerland, with varying ownership percentages at each level. Key entities include Rajesh Exports Limited in India, REL Singapore, Global Gold Refineries in Switzerland, Valcambi SA in Switzerland, Valcambi USA Inc., and Bab Al Rayan Jewelry LLC in the UAE. These entities span the import, export, refining, and retail of gold products.
The heart of the issue lies in REL's overseas operations. Nearly 99% of its consolidated revenue is attributed to subsidiaries, primarily Global Gold Refineries, GGR, in Switzerland, and its subsidiary, Valcambi SA. Here's the catch. GGR is just a holding company with no operations, yet it reported revenues hundreds of times higher than Valcambi SA, the actual operating entity. While Valcambi was only recording processing charges, GGR was recording the full market value of the gold as its own revenue. When SEBI asked for the records, REL hid behind Swiss data protection laws, which SEBI noted apply only to natural persons, not corporate entities. It wasn't just the overseas numbers. On a standalone basis, roughly 66% of REL's turnover came from an entity called Affluence Shares and Stocks. Investigation revealed REL was never even a client of Affluence. These sales and purchases, totaling over 11,400 crore rupees, were actually gold derivative trades executed by the promoter, Rajesh Mehta, in his personal capacity. SEBI found that company funds were used for his personal margin money. Furthermore, REL boosted its revenue by wrongly including foreign exchange fluctuation.
Fictitious revenue due to exchange fluctuations and interest amounted to over 1,000 crore rupees, making up 5.50% of the total revenue disclosed. Fictitious purchases exceeded 700 crore rupees. One of the most complex pieces is how REL settled 2,914 crore rupees in trade receivables. They claim to have netted these against trade payables using import invoices. But SEBI found these invoices were over a decade old and involved completely different parties. For example, one counterparty, Al Jamilat, had an email address that wasn't even configured to receive emails, and another's commercial license actually belonged to a different entity entirely. The investigation uncovered a systematic routing of corporate funds. Over 338 crore rupees was transferred to Rajesh Mehta and 21 crore rupees to his son, Siddharth, often for unspecified purposes or to pay personal credit card bills. Then there's Elest Private Limited, a promoter-controlled startup. REL transferred over 565 crore rupees to Elest, with only a fraction being approved by the board. REL even admitted in an email that funds were routed through personal accounts, specifically to hide the origin of the money. The fallout has been devastating for public investors. REL's market cap peaked at over 30,000 crore rupees in 2023. Since the investigation began and irregularities came to light, that value has collapsed, erasing approximately 12,725 crore rupees in public investor wealth. SEBI has now restrained Rajesh Mehta from dealing in REL securities, ordered the company to cooperate, and is appointing a new forensic auditor to finally get to the truth. Stay tuned as this story continues to develop. In summary, the Prima Facie findings include misrepresentation of over 15 lakh crore rupees in consolidated revenues and failure to provide a true and fair view of the financial position. Additionally, there were opaque netting arrangements and the routing of company funds through personal accounts. Thank you for viewing this analysis. The findings are based on the SEBI Interim Order dated June 3, 2026, for educational and informational purposes only. This is not investment advice.